What's going on, guys? It's Ricky with Tech Solutions. I want to thank you guys again for joining us for another live stream. It's 3:40 a.m. here in Spain, Barcelona, so it's pretty early in the morning. I was having trouble sleeping, and it's about 6 p.m. over there in Arizona or in Los Angeles, which is usually when I film my helpful video. So I was like, I'm kind of in the mood to make a video about kind of like what happened today. And if you guys didn't watch today's live stream, we ended up catching a stock. It was a VEO. We called it out yesterday, or I guess 2 days ago in our Sunday stock talk. So it was something that we were prepared for. But due to something because of me actually being here in Spain, Barcelona, in San Sebastian, Spain, I wasn't able to get to my computer in time at market open, and then I ended up jumping into like 150. Regardless or needless to say, it went from 150 all the way to $2.11. And I always talk about, it's like, okay, if you miss out on a stock or miss out on potential, even if it's in your watch list, you guys just need to understand that you guys just need to continue moving on forward. But that's kind of just like telling you guys to put your emotions away and stuff like that. And I really just wanted to share my best practice, what kind of led to my success and stuff like that. So I'm going to try to make this video very quick, but very easy for you guys to understand and why I think this is so important. So this video is like how to deal with the fear of loss. So how is it that when it comes to investing, you guys are investing possibly for the first time? So how is it that you deal with the, in a sense, idea of, when you invest in this certain stock, um, how is it that you can manage or deal with the idea that you might lose money? One of the biggest understandings, or one of the biggest things that has helped me when it comes to investing, especially in penny stocks and low cap stocks, is one of the first things I want to tell you guys is you should never invest in anything you don't understand. You should never be investing based on anyone else's opinion, and only invest in whatever it is that you personally see value in as an investor. If you don't understand it, then you shouldn't be trading it. That's, starting off, I want to make sure that I, in a sense, lead by example, and I want to make sure that I guide you guys in the right direction. So understanding that, right? So if you're not very knowledgeable when it comes to investing in low cap stocks, and you don't really understand the low, the high points, and different indicators to identify, if it's a good buy, maybe taking a little bit more time and trying to understand it to make sense of a trade, to plan out your trade, is going to be very important. And kind of going into that, something that's helped me, in a sense, make like deal with the fear of loss has to do with just understanding that when you're investing, there's always going to be, you know, like when I invest now with my Fidelity account, a little bit over $3,000, and I risk about 1%. I kind of think about even like $50. I kind of think of the $50 in my account kind of just not even there anymore. And the reason I think about that is I always like when I invest on average about $3,000 per position, but I don't risk more than 1.5%. So understanding that right away, I know that there's already a margin for risk, and I kind of don't even think about it like on my account. For some people, like they work so hard for like let's say for example about $1,000 in your account, and for some people when they invest those $1,000 and then it's not their in a sense position, something that we talk about within tech solutions to make sense of your trade is you should know what you're buying, you should be knowing, you should know where you're selling, and you should know where you should cut your losses. Understanding that it's easier said than done, and I 100% understand that, but when it comes down to something so simple, I want to make sure that at least I give you guys a real example. Like, there is no worse feeling than, well, like, you guys need to understand that when you're investing these $1,000 and it's not going the way that you want it to, you have that stop loss in a sense to manage your risk, to cut losses. And that is one of the hardest things for people to understand and to commit to, because you become so passionate, so emotional on a specific position. And understanding that and putting that all aside, if you guys take anything from this video, I want you guys to understand that when it comes to investing, there's always going to be this margin of risk. And if you're not okay with that, then trading low cap stocks is definitely not going to be a market for you. When it comes down to investing, let's say, your first $1,000 in the stock market, you want to make sure that that $1,000 isn't the only thing that you have to your name, because realistically, although we do encourage within TechBud Solutions for you to always manage your risk and for you to always have your stop loss, you should never invest what you're not okay with losing 100%. Sometimes people ask me, when I would state that I would trade with over $30,000, when I used to trade with Robinhood, or now that I trade with Fidelity, why is it that I only invest with, I used to only risk $1,500 per position. Now I do 3,000, 3,500. And although there's like the stop loss, so it manages like how much money you're actually risking, there's always this possibility that your stop loss won't fill at where you have it at, and you might be risking a little bit more than expected. And understanding that you should never invest, that's one of the biggest things, what you're not comfortable losing with. And that's one of the biggest things. But understanding that when you're going into a position, understanding that you have a stop loss, so in a sense a margin for risk every single time you trade, that is probably one of the most important rules you have to understand, because being able to cut losses has to be something that has to be second nature. And I can't talk about how much or how many people within TechBud Solutions. We have over 25,000 members now within TechBud Solutions, and it's been a true blessing. But I can't tell you how many people make the mistake of not cutting losses when they should, meaning that they're managing their losses, keeping them small, and they end up, getting emotional, holding on the stock. And I want you guys to comment down below if you guys have ever been in that position, because I know that I have, and there's no shame in that. And that's what I think causes or creates, TechBud Solutions to be such a powerful platform. It's because we're very transparent with one another. We tell each other, what we do good and what we do bad, in a sense, areas of opportunity, in a sense, not just for us to grow as traders, but for others to learn from our mistakes and learn from our best practices. So that's why I'm making this video today with my position, or the position I was going to take on AVEO. Why is it that I didn't jump into that position when it was up 60% at the end of the day from top to bottom? And a lot of people sometimes, not only get discouraged when they lose money, but they also get discouraged that they weren't able to fulfill their position on a stock that ended up doing very well. And then when they do jump into a stock, they end up doing bad. And then they always feel like they're in the back end, or the low end of a stock, and always writing it down. And you have to understand that it's going to take some time for you guys to really get the hang of it. But one of the biggest things that I want you guys to understand is, first of all, you should never trade based on anyone else's opinion. You should never invest in what you don't understand. And most importantly, you need to manage your risk. So to feel more comfortable with the fear of loss, to feel more comfortable with investing, because, with investing, there's no reassurance in anything. When you invest in anything, you're going to get your return 100%. So how is it that you deal with it? Well, you manage it. So it's as simple as, let's say you're risking $1,000. It's as simple as creating a plan, and I'm going to give you guys an example right now. I'm going to be sharing my screen so you guys can see exactly what it is that I'm talking about. And this is with AMD. This is more of a technical position, so it's a lot easier to understand, and that's why I wanted to show it to you guys. But AMD had a huge drop to lows of 1384, but it ended up bouncing pretty much. It held pretty well above 1390. It hit a slight resistance at about 1425. So we know that there's a support, there's a resistance, so a good buy point, a good sell point, and then where would you cut your losses? Well, AMD isn't necessarily a penny stock, but let's just say you treat it the same, and this is where it bounced, this is where you would cut losses if it drops below. As it was approaching, as it was coming back down, it bounced nearly at the same exact point. So you could have bought it in again at 1390, just at the same bounce when it's showing signs of upward momentum. Because again, you want to buy when you see signs of upward momentum. So in a sense, understanding that, okay, well, making sense of your trade based on the previous trend that you bounced at 1390, and a good sell point was 1425. So understanding that your potential for profit realistically within one day is about 2.45%. And if you buy in at 1390 and you want to cut losses short if it breaks below the support, your potential for loss is about 45%. And again, I'm just using this little trend line indicator to calculate my percentage risk. And that's under drawing tools, or drawing tools, and it's trend line. But understanding that it makes you more comfortable understanding, and you can manage your risk that much better. And I think for a lot of people, in making sense of your trade, making sure that you understand that you're getting in at a good buy based on its history, you're getting in at a good sell based on its history. And it doesn't mean that it's always gonna go up to 1425, because it ended up not hitting that high. It ended up hitting highs of 1408, and then it came back down, but it's still holding above your stop loss. And that's the most important thing, is um, understanding that there's always this margin for risk, but it's how you manage it that will lead to your success. One of the biggest things that we talk about is the only way that your brokerage account will stay in the green, for those that want to stay consistent and just lock in profits, is lock in profits when you're in the green and cut losses short. In the long run, mathematically, that's what makes sense on how you can minimize loss and promote growth. And I just wanted to make a video because a lot of you guys have been struggling in executing your position when it comes down to actually making your first trade. I want to make sure that before you guys make your first trade, you guys understand the risk, but you guys understand how to properly deal with it. And I'm just talking again with my own best practices. Something that some of you guys might need to take is the TD Ameritrade paper trading account. There's no real monetary risk, and it's an account where you can invest in real-time stocks, but with fake money. That might be one of the steps that you guys might want to take. Other than that, if this management, in a sense, portion, when it comes down to dealing with the fear of loss, you have to understand that if you're investing, there's always going to be this just potential for loss. So I just want to encourage you guys that the best way to deal with loss is to at least manage it, and at least, in a sense, only lose what you're comfortable losing every single time you trade. And the only way that you're going to be able to do that is if you understand what you're investing in, that you understand you're getting in at a good buy, and you have a plan every time you trade. You know where you're buying, you know where you're selling, and you know where you're cutting losses. And you guys might be saying, well, Ricky, you always say that. It's like the same thing you say with everything else. I mean, I want to hear what you guys have to say, not only based on my best practices that that I'm sharing with you right now on how to deal with the fear of loss. But if you guys want to comment down below once this video publishes, please comment down below. And I'd really appreciate the help for all those that have experienced the fear of losing money, or what has led to your success when it came down to consistently locking in profits. I think the thousands of people that see this video can truly benefit from the comment section when it comes down to all of us coming together, and again, just sharing our best practices, just like we do within the Technical Solutions platform. So again, I want to thank you guys again for joining us. The link is provided for you down below if you guys are not a part of Technical Solutions already. We're a little bit over 25,000 members worldwide. And again, you simply just have to have a Facebook account, and you can join our Facebook group. That's all it is at the moment. And then on the top pinned post within the Facebook platform, we have the series of group chats that you have available to access. And that's really just it. So thank you guys again so much for watching. I hope you guys found this video helpful. And if you guys have any suggestions or recommendations for future videos, please feel free to let me know. I'd love to make a video based on your recommendation. I hope you guys have an amazing day. Hope you guys have an amazing night, and get some rest. Like always, guys, let's make sure that we end the year on a green note. Take